Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, and it's June 26th. We got a it's kind of a quiet day today. We got two items on the economic calendar. We'll start off with the Case-Shiller Home Price Index. The HPI stands for Home Price Index for the month of April. Previous reporting back in March, it came in at 6.5%. And the forecast, there was no forecast, but it dropped down to 6.4. So pretty much the same range. It's not really a huge trade or loss, but we are starting to see things kind of heat up here in the summer. As you can see, this is for the month of April. In summertime, things usually pick up a little bit. So again, nothing to be concerned about here. It's still a strong number here. This is over the 20 largest markets here. Now, the West Coast, we see still in some cases double digits. You know, we had about Seattle, Las Vegas, some of those places. I think even San Francisco are double digits growth. New York, LA is around 8-9%, so above the average here. And last but not least, we got the consumer confidence for the month of June. We had a previous reporting at 128.8. It was supposed to be kind of in that same range at 128, and it dipped down a little bit further to 126.4. Still, these are like that 128. These levels here are like one of the highest in recording history. So again, a very strong number, even though it shows that it dipped a little bit. We don't have a whole lot further to go up because, again, these are levels that we've, I think the previous one was around 130, just before 128, it was around 132, 134. And that was like the second highest ever in recording. So this level here where we're at, very strong. People are feeling very confident where the economy's at, which is obviously a good sign, especially considering, all the trade talk and everything. The trade talk that's been out there. So speaking of such, we'll kind of get into that here in a minute. Stock market is currently up. It's kind of rebounding after pretty big losses yesterday that have suffered, and a lot of it, of course, is due to the trade talk we were just mentioned here. Some of the new ones is that there's concerns about putting restrictions on foreign investment from China. Some people thought it was just strictly China, but then there's been mention of this is applied to all countries, about stealing U.S. technology. So there's going to be potentially some type of a bill that will probably help those companies out. And again, there are concerns that they're investing in these companies and then stealing that technology into their own countries. And again, that's something that is being mentioned and kind of going back and forth on. Let's kind of move forward here, see how this is affecting the bond market. The bond market, as you can see, we were up quite a bit yesterday, and we pretty much closed to about where we were the previous day. So pretty much closed on even yesterday. But we did close above the 50-day moving average and the 25, and now the 25-day, of course, is rising. So we'll see how that transpires with this rising, if this is going to push it up further as a floor of support, or if we break below that or not. So again, this is going to be we're pretty much about 6 basis points from where we left off yesterday. So again, this is about 6 basis points. It's not a whole lot here, but again, it's kind of drawing us closer to this floor support. We're not getting a whole lot of steam, especially considering that the stocks closed, Dow closing over 300 yesterday. If that was a normal market, we would be going way up here. But again, as we indicated yesterday, there's not a lot of demand for the mortgage-backed securities and treasuries at this time, especially when the rate of return isn't as great as the equities market has been taken off quite a bit. So take a look here at the yields, and right now the 10-year Treasury is about where we left off yesterday at 2.88. So we're still a little bit under the 100-day moving average here, and this could help put pressure further down, which would help mortgage-backed securities. So if this goes further down, this would help drive mortgage-backed securities even further up, which would help interest rates, drive down interest rates. So this is how to kind of read those. That pretty much wraps things up. If anything changes, I'll be posting on Twitter. So if you guys want to come over on Twitter and follow me at Mike Bjork, you can get the latest updates there. Otherwise, you guys have a great rest of your day. Thanks so much for watching. I look forward to see you guys tomorrow. Bye-bye.